Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Cardano, taking a look at what's been going on most recently, what we expect to happen next and all that wonderful stuff. As I get into this video, if you find it useful and informative, hit the like button, I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Now if you have not yet joined us down in the Discord server, the link is in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check that out? You'll also find links to our Patreon services and a whole host of additional interesting kind of links in the description below. If any of them are of interest to you, why not check them out? Okay, let's jump right down into this video here on Cardano. Okay, so Cardano paired up with USDT on the hourly chart. Binance is the data source. Now, for the most part, we can acknowledge that we had this 5-wave drop up here, for example, and we're looking at maybe coming back down a little bit lower into the next kind of 5 waves and so forth. Our accumulation zone is down here, okay, at 28 to 34 cent. Might even come down lower. As you can kind of see, we have the 22.23 that we've been talking about for months as a potential low point for us. Now, if I come up into our daily chart, just bring this back down here a fraction, you can of course see that we have come down lower now than the June low. So the bottom clearly was not in for Cardano. Okay, so when we start talking about, you know, whether the bottom is in, it's important that we also reference there are 21,000 different altcoins. The bottom cannot be in for all altcoins, okay, all at the same time. So when people are saying the bottom is in, they need to specify exactly what altcoin they're referencing, or what coin, in case of Bitcoin, that they're referencing. This is just one of many that have come down into new lower lows, and I do think eventually, you know, many others will come down into new lower lows as well, as most of our accumulation zones are significantly lower than the June lows. And obviously none of the data from June upwards is anything bullish. Okay, it all looks pretty bearish to me. So we've been talking about this for months, so it's no surprise that we've broken back down. Let's come back into our hourly chart and actually start talking about this move to the downside and the recent price action here. Very, very violent on this way down. We can kind of see how this is kind of going yesterday, but everything is gearing up for a bit of a bounce in my opinion. So we want to kind of take a look at this and see exactly what is going on. Let's go ahead and just tidy up some of these structures just inside here. Let's go ahead and actually what we're going to do is going to remove all of these here. Okay. What we're going to do is we're going to just acknowledge what's going on here because we have come down quite a bit. This might no longer be 3 waves. So what we want to do is we want to check this out. Okay, so we want to grab this low point just right about here, go up to this high point right on that one there, and then we're going to move this over to our B wave just here. And here you can see that we've just come down lower than the 1.382. The actual 1.618 target is 35.19. Okay, so I'm going to go ahead and just mark that up there, 35.19. And that's basically going to be our trigger point to convert this into a 5-wave structure, right? So at the moment it's just 3 waves, just like this. Okay, and it's just slightly overextending past that 1.382. But if we hit 1.618, then that's actually going to turn into a 5-wave structure. Now, for the most part, I think a 5-wave structure is better fit because if we actually take a look at here, okay, if we grab this low point, which I'm going to have to zoom in for if I can grab it, there we go, to this high point, this B wave high here, move it over to this one right here, we can then see that actually we're very, very close to this 1.618. Okay, that's 36.02. Okay, so if we were to come down to there, then obviously, you know, inside this C wave, it would basically look like this, right? We'd have this kind of structure. Now, that's just from where I've measured it there. It might actually make more sense to measure it slightly differently and actually measure it from here rather than here. But I think, you know, for the most part, that's going to be 36.02 is probably going to be the best place to do it. So that's why I measured it there. I don't think there's a need or requirement to change that up any. We could, of course, maybe look at it from this point of view. Grab this one to this one just to kind of play devil's advocate and just see how these numbers shift and change. This would put us down here at 34.41. Okay, so there's going to be something all around this little area that could be an indication that we actually start dropping down in an impulsive structure, which, you know, wouldn't be too much of a surprise because we have 5 waves here. We are looking for 5 more down. So, you know, 5, 3, 5, 3, 5 potentially. And obviously that marries up with our first 5 waves this side, meaning that we might actually be coming down much lower than our 22 if we're to see this as a 5, 3, 5, 3, 5 on a much bigger scale. Okay. But Cardano isn't unusual. I think this is a fantastic opportunity. The lower the price goes, I think the more buying pressure there's going to be from institutional players who really do want to get in on Cardano. We've seen an increase with this, specifically as whales have been accumulating at the recent kind of lows. So this is not an unusual thing to be expecting, that the lower the price goes, or the lower that they push the price, the more accumulation that they're going to have. There's always a buyer, there's always a seller. So as these prices are coming down, whilst people are fearful and selling off or getting liquidated, and there's a buyer on the other end of that, and it's going to be interesting to kind of see how that kind of progresses. I do think Cardano is going to do incredibly well in the next bull run, so loading up at these low prices to me seems like a pretty wise idea. But obviously, it's important that you do your own research, come to your own conclusions. I'm not a financial advisor. I can't give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I see it personally. So for the most part, I think everything on Cardano here is actually coming up quite nicely. So pulling back just as we kind of were thinking, nothing unusual. Other than that, let's take a look at the stocks. Okay, so the stochastic RSI is a momentum indicator. Okay, so the momentum indicator is telling us that on our hourly chart we're oversold. In fact, we actually have my cheeky indicator just on the right hand side here. This is free to all Patreon members in our Discord server, and actually via Patreon as well, but you cannot search this in TradingView. This is something that's an invite only, so Patreon members can get hold of this. This is a multi-time frame stochastic RSI indicator that helps us understand whether or not we're overbought or oversold on the multiple different time frames, without having to flick through each and every one of them, right? So 60-minute here on this hourly chart, we are oversold. The 4-hour we're oversold, the 8-hour we're oversold, the daily we're oversold, the weekly we're not, and the monthly we are. So essentially this tells us that we're running out of momentum to the downside. We can still continue to go down, but it's basically telling us that we're slowly working our way out of this pattern, and we're going to start to see a bit of a reversal. So let's actually take a look at that weekly time frame. It's quite high, so there's still progression to the downside to be had there. The daily is oversold, obviously. The 4-hour, 8 hours oversold. The 4 hours oversold. The hourly is oversold. So a bounce to the upside, specifically of a 3-wave nature, is going to be something that we need to be expecting at some point soon. Okay, so a move upwards is due. Okay, but that doesn't mean that we can't continue to move down later either. Okay, so just be aware that I think that the entire crypto space is kind of gearing up, ready for a big move, and some of these violent moves that we've seen over the last couple of days to the downside, I think, are specifically there just to liquidate anyone who's currently going long, so that they can't benefit from what happens next, which is a big move to the upside. Okay, so essentially I just think there's been a liquidity grab to the downside over the last few days, specifically last night, where we saw things like XRP dramatically drop to the downside, even though they were heavily oversold, and they would have grabbed a lot of liquidity in doing so, as a lot of people were going long on things like XRP and Cardano. So don't be too surprised if this move now actually occurs and we do move upwards, just liquidating any of those long positions beforehand. Okay, so that's kind of one of the things to kind of keep an eye on. Now, from our daily standpoint, if we were to kind of reflect on this, we can see that our 22-cent range is actually our 3-wave structural endpoint, and we can also be a little bit more descriptive over taking our June low as another B wave or A wave end and B wave start. If we were to reflect on that, we could also see that 22.23 seems to be the most obvious area where we're going to move down to. Okay, after this is done, I'm expecting 5 big waves to the upside to marry up with the 5 waves that we had from 2020 through to 2021, and this is going to push us up quite a bit higher. Now, there's a couple of key areas on our kind of bigger macro timepiece here that's indicating that, I think the 618 is a key area, the 786 are key areas, right? Basically $5.43 to $12.94. However, if we were to see a 1-to-1 ratio, you're talking $39 ADA. Now, obviously, $39 ADA is going to be a number that's going to scare a lot of people. And I say scare a lot of people because people will say, oh, you can't have a market cap that high, right? Market cap can't possibly be that high. It's a ghost chain. It's got nothing built in it. It doesn't have smart contracts. Doesn't even have a running DEX. You name it, there's some kind of, nonsense out there. Now, let me just kind of put to bed some of that kind of stuff right now, okay? So a market cap is the last sold price multiplied by the circulating supply. Okay, so just think about that for a second. Essentially, the price multiplied by the supply doesn't actually give us an indication of money. It doesn't give us an indication of value. It doesn't give us an indication of liquidity. All it does is it tells us that at macro price, if you weren't able to, which you're not, by the way, just for clarity, you cannot do this, but if you were able to liquidate every single coin instantaneously and simultaneously together, then that's how much money you would have to have in there in order to do it. Right? That's basically what market cap is. It's actually a really pointless number if you're trying to use it as a measure to say you can't do something because of it. Instead, you need to think about what actually drives price movement. Okay, and that's supply and demand. Supply and demand are the only metrics that actually dictate the price movement. And if you know what's going to kind of squeeze the supply or what's going to increase the demand, essentially you're going to see a really high market cap, right? So I don't want to say that $39 is an impossibility, because it simply isn't. But you do need to see a significant squeeze on the supply and a significant increase in the demand, okay? Those two things can make this a reality. Nothing to do with market cap whatsoever, okay? And all that other kind of FUD about, ghost chains and all that kind of stuff, you really need to do more research if that's what you truly believe, and stop blindly following a lot of influencers who clearly have no idea what they're talking about when they kind of spill all this nonsense out of their mouths, okay? Essentially, you've got to do your own research. Don't just take my word for it. That's kind of the point here, right? Go and do your own research, come to your own conclusions, and you won't regret what you find. But essentially, if you just blindly follow some people who generally don't know what they're talking about, then you're going to end up in a world of pain. That's my personal belief in it. So I'm going to leave this video right there. A little bit of a rant at the end, and I apologize for that. But when we have these kind of patterns here, it's important that we kind of acknowledge the possibilities of areas where we could visit, and obviously the kind of areas that we want to be concerned with, such as the 618 and the 786, right? Those are areas that are going to be barriers. But if we do close above the 786, well, then you're talking, there's going to be potential for that 1-to-1 ratio, and that could be $39 ADA, okay? So I'm going to leave it there. If you found it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.